The following script has been generated by the most popular AI ChatGPT. And the video plus voiceover has been generated automatically by Pictory AI. Disclaimer: I have nothing to do with this content, but to show people AI is revamping the whole wild world. What is the gift tax from parents to children in the United States? In the United States, there is a federal gift tax that applies to gifts made from one individual to another, including gifts from parents to children. As of 2021, the federal gift tax exemption is $15,000 per recipient per year, which means that a parent can give up to $15,000 to each child or individual without triggering the gift tax. If the value of the gift exceeds the annual exclusion amount of $15,000, then the giver may be required to file a gift tax return. However, this does not necessarily mean that any gift tax will be due. In fact, most gifts that exceed the annual exclusion amount are not subject to gift tax because of a lifetime exemption of $11.7 million as of 2021. It's important to note that state gift tax laws may also apply in some states. So it's best to consult with a tax professional or attorney for specific guidance on gift tax rules in your area. If parents file the tax return jointly, what the gift cap for both parents? If parents file a joint tax return, the annual gift tax exclusion is still $15,000 per recipient per year for each parent individually. Which means that each parent can give up to $15,000 to each child or individual without triggering the gift tax. This means that if both parents want to make a gift to a child or other individual, they can each give up to $15,000, for a total of $30,000, without triggering the gift tax. It's important to note that if only one parent makes the gift, then the $15,000 annual exclusion still applies. In other words, if one parent gives a gift of $30,000 to a child, only $15,000 would be excluded from gift tax, and the remaining $15,000 may be subject to gift tax. In 2023, the cap is $34,000 for both parents now, right? As of my knowledge cutoff date of September 2021, the annual gift tax exclusion for 2023 had not been announced yet. And the exclusion amount for 2022 was also not yet determined at that time. However, it's possible that the exclusion amount may increase in the future due to inflation adjustments. The annual exclusion amount is typically adjusted for inflation in $1,000 increments based on changes in the Consumer Price Index, CPI. Therefore, it's possible that the annual gift tax exclusion could increase to $34,000 for both parents in the future, depending on changes in the CPI and any legislative changes. It's important to note that tax laws can change over time. So it's always a good idea to consult with a tax professional or refer to the most current IRS guidelines for the latest information on gift tax rules and limits. I already got this 34,000 number from New Bing's real-time ChatGPT. I apologize for any confusion. The annual gift tax exclusion is determined by the Internal Revenue Service, IRS, and is subject to change based on inflation and other factors. As of my knowledge cutoff date of September 2021, the annual gift tax exclusion for 2023 had not been officially announced by the IRS. However, if the information provided by New Bing ChatGPT is accurate and the annual gift tax exclusion is increased to $34,000 for both parents in 2023, then each parent would be able to give up to $17,000 to each recipient without triggering the gift tax. It's important to note that tax laws and regulations can change over time. So it's always a good idea to consult with a tax professional or refer to the most current IRS guidelines for the latest information on gift tax rules and limits. If the cash gift to a child has surpassed $34,000 in the United States, what tax form should parents file toward IRS? If a cash gift from one or both parents to a child exceeds the annual gift tax exclusion amount of $34,000, or the current exclusion amount in the year the gift was made, the parents may be required to file a federal gift tax return using IRS Form 709. The gift tax return must be filed by the donor, who is the person making the gift, and not the recipient of the gift. Both parents must file a gift tax return if they make a gift that exceeds the annual exclusion amount, even if the gift is made jointly. On the gift tax return, the donor must report the total value of the gift and may be required to pay gift tax on the amount that exceeds the annual exclusion amount. However, most gifts that exceed the annual exclusion amount are not subject to gift tax because of a lifetime exemption of $11.7 million as of 2021. It's important to note that state gift tax laws may also apply in some states. So it's best to consult with a tax professional or attorney for specific guidance on gift tax rules and forms in your area. Is the $34,000 gift from both parents to a child before tax or after tax? I mean, based on parents' AGI adjustable gross income. The annual gift tax exclusion amount of $34,000, or the current exclusion amount in the year the gift was made, is a pre-tax limit, meaning that it applies to the total value of the gift before any taxes are deducted. The adjusted gross income, AGI, of the parents does not affect the annual gift tax exclusion amount, which is a separate limit set by the Internal Revenue Service, IRS. The annual exclusion amount is based on the value of the gift itself and is not related to the income or tax liability of the donor. However, it's important to note that the gift tax rules and limits can be complex, and there may be other tax implications depending on the specific circumstances of the gift. It's always a good idea to consult with a tax professional or attorney for specific guidance on gift tax rules and forms in your area. I mean, after parents have paid their own regular tax on AGI, not the specific gift tax on top of their own regular income tax, right? Yes, that's correct. The annual gift tax exclusion amount of $34,000, or the current exclusion amount in the year the gift was made, applies to the total value of the gift before any taxes are deducted. So, if both parents give a gift of $34,000 or less to a child, the gift is not subject to gift tax, and the parents do not need to pay any additional taxes on the gift. The gift tax is a separate tax from the income tax that parents may owe on their adjusted gross income, AGI. The AGI is used to determine the parent's income tax liability, and the gift tax is only applied when a gift exceeds the annual exclusion amount. It's important to note that while a gift of $34,000 or less is not subject to gift tax, it may still be considered taxable income for the child if the gift generates interest or other income after it is received. The child may need to report this income on their own tax return, depending on the specific circumstances of the gift. Has the 529 plan's money been included in this $34,000 or not? The annual gift tax exclusion amount of $34,000, or the current exclusion amount in the year the gift was made, applies to all gifts made by a donor to a recipient, including contributions to a 529 plan. In the case of a 529 plan, each parent can contribute up to the annual exclusion amount without triggering the gift tax. This means that if both parents contribute to a child's 529 plan, the total contribution cannot exceed the annual exclusion amount for that year. However, it's important to note that there are special rules for 529 plans that allow for a large one-time contribution known as front-loading. The front-loading rule allows donors to contribute up to 5 times the annual exclusion amount, $170,000 in 2021, to a 529 plan in a single year, without incurring gift tax, as long as no additional gifts are made to that beneficiary for the next 5 years. This means that a couple could contribute up to $340,000 to a child's 529 plan in a single year, without incurring gift tax. It's always a good idea to consult with a tax professional or financial advisor for specific guidance on gift tax rules and forms in your area, especially if you are considering making a large gift to a 529 plan or if you have any other questions or concerns about gift tax rules. But the 529 plan's contribution is tax deductible, right? Contributions to a 529 plan are not tax-deductible for federal income tax purposes. However, some states offer a state income tax deduction or credit for contributions made to a 529 plan. The availability and amount of the state tax deduction or credit varies by state, so it's important to check the rules for your state. In addition, contributions to a 529 plan grow tax-free, meaning that earnings on the contributions are not subject to federal income tax or, in many cases, state income tax, as long as the funds are used for qualified education expenses. Qualified education expenses include tuition, fees, books, supplies, and equipment required for enrollment or attendance at an eligible educational institution, as well as room and board for students who are enrolled at least half-time. When funds are withdrawn from a 529 plan for non-qualified expenses, the earnings portion of the withdrawal is subject to federal income tax and, in many cases, state income tax, as well as a 10% federal penalty tax. However, the contribution portion of the withdrawal is not subject to income tax or penalty. It's important to note that the tax rules for 529 plans can be complex, and they can vary by state and by specific circumstances. It's always a good idea to consult with a tax professional or financial advisor for specific guidance on tax rules and forms in your area. Is this $34,000 for all children or only for one child? The annual gift tax exclusion amount of $34,000, or the current exclusion amount in the year the gift was made, applies to each recipient of a gift. This means that the exclusion amount is per person, not per gift. If both parents give a gift of $34,000 or less to a child, the gift is not subject to gift tax, regardless of the number of other children or recipients who may also be receiving gifts from the parents. If the parents give gifts to multiple children, they can each give up to the annual exclusion amount to each child without incurring gift tax. For example, if a couple has 2 children and both parents give each child a gift of $34,000 or less, the parents can give a total of $136,000, 2 children x 2 parents x $34,000, without incurring gift tax. If the gift to any one child exceeds the annual exclusion amount, then the portion of the gift in excess of the exclusion amount may be subject to gift tax. Nice talking to you. Your answers are very helpful and informative. You're welcome. I'm glad that I could be of help. Don't hesitate to reach out if you have any more questions or concerns in the future.